Welcome back, your trusted source for accurate, timely insights into currency revaluation developments and global financial transformation. As the landscape of international finance evolves, previously undervalued currencies are starting to attract serious attention. Among them, the Iraqi Dinar, IQD, and Vietnamese Dong, VND, have emerged as focal points in a broader monetary recalibration, one that could redefine wealth preservation and investment strategies across the globe. What once existed largely in the realm of speculative forums and fringe economic debate has now matured into a conversation grounded in data, institutional behavior, and geopolitical signals. Recent analysis from the influential commentator Frank26, long followed for his insights into macroeconomic indicators and central banking trends, suggests that the IQD is now reportedly pegged at $4.58 and the VND at $3.77. These figures, long whispered about in online circles, are beginning to receive support from observable institutional movement and growing acknowledgement from financial entities. This moment holds the potential to reshape not just investment portfolios, but also global economic narratives. It's not only a turning point for individual investors, but a signal to governments, corporations, and international institutions that the balance of financial power may be shifting. The revaluation of these currencies reflects not just monetary adjustment, it reflects the revival of nations that have endured hardship, conflict, and years of economic instability. The IQD and VND now stand as testaments to national reform, modernization, and resilience. Iraq's economic transformation over the past decade has been nothing short of significant. Beneath a surface once dominated by news of political unrest and corruption, the country has been laying down a framework for recovery and legitimacy. The Central Bank of Iraq has imposed tighter regulatory frameworks, worked to stabilize inflation, and increase transparency across financial systems. Oil exports have surged as infrastructure has improved, and Iraq's engagement with international organizations like the IMF and World Bank has further validated its economic renewal. This reported revaluation of the dinar represents more than just increased value. It represents international recognition of these reforms. The implications are far-reaching. A stronger dinar means lower import costs for Iraq, a more favorable balance of trade, and enhanced credibility in global financial negotiations. It signals to investors that Iraq is no longer a fragile, war-torn economy, but a nation asserting itself as a regional financial force. For Iraqi citizens, it could lead to greater purchasing power, improved public services, and increased access to global goods. For businesses, it opens new channels of trade, foreign investment, and cross-border finance. Vietnam, too, is experiencing a parallel transformation. Long viewed as a low-cost manufacturing hub, Vietnam has used this foundation to attract foreign direct investment, integrate into global supply chains, and evolve its financial ecosystem. Its long-standing monetary policy of maintaining a low dong value for trade competitiveness is now shifting in response to domestic growth, technological advancement, and greater global engagement. The reported valuation of the VND at 3.77 highlights Vietnam's emergence as a credible financial player. It is no longer simply an export-driven economy. It is becoming a force in digital innovation and macroeconomic stability. This new valuation also challenges outdated perceptions of emerging markets, showing that with consistent reform and strategic policy, real global standing can be achieved. For holders of the dong, the implications could be significant, with speculative positions potentially turning into substantial returns. As these nations push toward modernization, they are also embracing the future of finance, particularly through the exploration of central bank digital currencies, CBDCs. For Iraq, despite its heavily cash-dependent economy, strides are being made in mobile banking, electronic payment systems, and financial literacy initiatives. Vietnam, already more advanced in digital integration, is piloting blockchain-based financial tools and seeking to expand digital inclusion. The integration of CBDCs introduces a powerful new dynamic. Digital versions of the dinar and dong could offer greater liquidity, enhanced traceability, and improved cross-border transaction capabilities. These digital frameworks not only promise better efficiency, but also reflect a deepening of monetary sovereignty in a digital age. If executed thoughtfully, this shift could attract new categories of investors, from fintech companies to crypto funds, and increase both domestic and international confidence in these currencies. Institutional reactions to the revaluation reports are already unfolding. Global banks are said to be revisiting internal currency benchmarks. Financial analysts are being asked to reassess previously low-priority assets, and currency desks in Asia and the Middle East are updating risk exposure models. What was once speculative chatter has now triggered formal assessments and strategic adjustments, demonstrating that this is no longer merely a fringe interest. It's a movement grounded in observed, data-supported change. Pension funds, sovereign wealth managers, and diversified ETFs may soon find it necessary to include exposure to IQD and VND assets, not as high-risk plays, but as integral parts of a balanced emerging market strategy. These shifts also prompt deeper questions about how value is attributed to national currencies in today's world. Traditional metrics such as GDP and inflation are now joined by considerations of policy reliability, geopolitical alignment, and digital infrastructure. Yet, as with all financial transitions, caution is critical. Investors should remain alert to the nuances of the exchange process. Conversion procedures are expected to vary significantly depending on location, institution, and transaction size. Some banks may require proof of currency origin, tax documents, or prior appointments, especially for large volume transactions. Others may impose holding periods or capital gains taxes based on jurisdiction. The risk of scams or unauthorized exchange services also rises during times of monetary flux, making due diligence essential. Investors are encouraged to seek guidance from certified financial advisors and legal professionals before making significant currency moves. Proper account setup, verified documentation, and timing are all crucial to ensuring that potential gains are realized safely and within regulatory boundaries. While the upside of a revaluation can be substantial, converting that potential into actual value requires strategic planning and an understanding of tax, compliance, and liquidity factors. Importantly, Iraq has confirmed that the physical dinar will continue to be recognized as legal tender alongside digital developments. This ensures continuity for the population, particularly in rural and underbanked areas, as digital adoption progresses. A hybrid model will allow for gradual adjustment without disrupting commerce or daily life. Education campaigns, banking outreach, and infrastructure upgrades are expected to accompany this transition, reflecting a measured approach to modernization. For overseas holders of physical currency, this reassurance is vital. It means that physical dinars retain value and legitimacy even as Iraq prepares for a digitized future. The ongoing digitization effort, combined with strong valuation, forms a foundation for expanded financial inclusion and broader digital participation, both domestically and internationally. The reported revaluations of the IQD and VND are far more than numbers. They represent validation. They are a signal that years of sacrifice, reform, and resilience are finally receiving international acknowledgement. Behind these valuations are stories of real people, citizens, workers, policy architects, who have helped steer their countries through adversity toward economic renewal. For Iraq, this development marks a shift from post-conflict recovery to active regional influence. For Vietnam, it reinforces its rise as a key industrial and financial player in Southeast Asia. And together, these shifts reshape how emerging markets are viewed. Not as volatile outliers, but as maturing economies ready to lead in a new era of global finance. As we move deeper into 2025 and beyond, it's clear that economic leadership is being redefined. Inclusivity, innovation, and digital readiness are becoming the new pillars of financial credibility. Iraq and Vietnam are no longer waiting to be acknowledged. They're stepping forward to shape the future of money. Those paying close attention now may find themselves ahead of one of the most significant economic transitions of our generation. This is more than an investment trend. It's a reflection of global rebalancing, of policy finally catching up to potential, and of a future where currency value is as much about trust, governance, and innovation as it is about historical benchmarks. By staying informed, asking the right questions, and moving with intention, investors and observers alike can participate wisely in what may be a defining moment in modern financial history. The road ahead will require vigilance, flexibility, and discernment, but for those prepared, it offers unprecedented opportunity. Stay connected with Iraqi Dinar Info for real-time updates, trusted analysis, and practical guidance as this story continues to unfold. In a world where economic momentum is shifting, the value of credible information has never been higher.